Thank you for joining me in this webinar. This is going to be a presentation on credit, understanding credit, some things you can do to help you repair your credit and how you can maintain and keep a healthy credit profile. My name is Anthony Richardson, and I'm a certified credit repair specialist and also a certified credit repair consultant. I'm here to help you dissect the nuances when it comes to credit, consumer reporting, consumer law, so that way you can better serve yourself when you're disputing with collection agencies or either the credit bureaus. I want to help you prepare yourself so that way you can keep and build a healthy financial credit profile. So let's get straight into the presentation. So what we're going to learn is the fundamentals of credit, assessing your credit health, strategies for credit repair, building and maintaining a good credit score, and navigating credit repair challenges. So what are the fundamentals of credit? Understanding what your credit score is, knowing who is on your credit report, who you owe, what the balances are, and how to maintain a healthy utilization so that way you can maintain a positive credit score. So what is credit? By definition, credit is the financial arrangement where you borrow money as a credit and agree to pay it back to the lender in the future, often with interest. It's how you can leverage your wealth by enabling purchases, investments, and the smooth operations for transferring money back and forth. So you get a credit card for $500 and you use that credit card and spend $350. Now that credit lender is going to want that $350 back plus interest. So you will either have a financial plan to pay that back at a minimum of whatever the minimum is, maybe $25 per month over a period of time in order to pay back that $350 plus the 14 or 18% interest, whatever they're charging you. So the types of credit that you have are, you have revolving credit like credit cards, installment loans, and mortgages. And you also have open credit accounts such as like utility bills or cable and phone bills. Understanding these types of credit will help you maintain a good, healthy balance on your credit profile. This is also giving you a credit mix. A lot of times the utility bills like telephones and the cable companies or even the electric bill, they don't normally report to your credit profile, but you can actually call them up and have them added to your profile. As long as you have a good payment history with them, that's a good option for you to help you boost your credit. So some of the importance of your credit score is it's a numerical representation of your credit worthiness. Lenders use it to assess the risk of how they're going to lend to you. A higher score can do better with interest rates and long-term loans. So meaning if your credit score is 720 or above, you're going to get lower interest rates. So meaning that over a period of time, you're going to be paying less for whatever you're borrowing against that credit lender. If your credit score is not that good, 650 or less, 660 or less, something like that, if your credit score is not that good, you're going to be paying more over time versus a person with better credit score than you. So how does credit work? The lending process is when you apply for credit, lenders evaluate your credit history to decide whether they're going to extend credit to you. This process involves checking your credit score and reviewing your credit report for past financial behavior. So they're looking for things like the length of credit, how long you had credit. Anything over 2 years is kind of like a good history of your credit profile. Your mix of credit, do you have, how many credit cards you have, what types of credit cards you have, the limits you have on your credit cards, the balances you have on your credit cards. Do you have a mortgage? Do you have like an installment loan, an auto loan? And all of these different types of accounts would need to be on your credit profile to show that you have a mix, in addition to you either paying them on time and also maintaining a 30% utilization, at least on all of your credit cards. So the next one is interest rates and fees. So credit comes at a cost, which it includes interest rates and fees. These fees can vary based on the type of credit, your credit score, and the lender's policies. Like I said before, if you have a higher credit score, you're going to get a lower interest rate. If you have a lower credit score, they're going to give you a higher interest rate, which means you're going to be paying more over time. So some of the credit agreements is when you're granted credit, you enter in a legal agreement to repay whatever you borrow from that credit lender. So if they give you a $500 credit card and you max the credit card out, you are legally obligated to pay that back to that lender that lent you that money. When you're looking at your credit reports, here's some key factors to look for when you're trying to decipher what's going on with those credit reports. A credit report is a detailed record of your credit history, including account payments, histories, and debts. It's maintained by the consumer reporting agencies and is used by lenders to make a decision. So your credit report will have all of your information, your name, the places you worked at, your addresses, and all of the credit cards, student loans. So how do you access your credit report? There's many ways to access your credit report. You can access it through annualfreecreditreport.com. You could click the link in the description and you will find the Identity IQ, which is the My Score IQ link, where you could get your 3 reports and score all for $1. If you don't want the services of credit monitoring, you will have to cancel before 30 days. So click the link in the description to get all 3 of your credit reports and score today. This could also have an impact of your credit history. Your credit history can affect very aspects of your life, from loan eligibility to job application. A positive credit history can open doors, while a negative can create barriers. So it's important to maintain a good credit history. I know sometimes we may face some financial challenges, but that's where a budget comes into place that keeps us disciplined, so that way we don't overspend when times is hard for us. So what are the role of the consumer reporting agencies? The consumer reporting agencies, such as Experian, Equifax, and TransUnions, collect and maintain credit information on consumers. You also have 2 more, which is LexisNexis and CoreLogic. These are the data furnishers. These are the guys where Equifax, TransUnion, and Experian get their information from. Most of the time when you're disputing negative items on your credit report, it's sometimes good to suppress your information with LexisNexis and CoreLogic. Either way, I found it work. Either way, doing it by suppressing it or not, I still found disputes work, as long as you send the right letters and speak the right language. So what are the differences between the credit bureaus? Each bureau has a slightly different information on file, which can lead to various information on your credit reports and scores. That's why you may have Experian could be 600, TransUnion could be 630, and then Equifax could be 540. That's because they all don't carry the same information. That's why it's important for you as the consumer to make sure your information is correct and updated across all 3 of the major credit bureaus, or rather the consumer reporting agencies. That is your job to make sure your information is correct. It is not their job to display correct information about you. It's their job to make sure that they are displaying correct information about you. So you have to do your due diligence and make sure your information is correct. Date, amount, account number, name, everything has to match all across each one of these credit bureaus when you're disputing negative items, or when you're viewing your credit report. You want to make sure everything is exactly the same, 100%. So some of the disputing errors, if you find some inaccuracies on your credit report, you have the right to dispute with these credit bureaus. That's why it's important to understand how to read your credit report. If you have credit card number 1 on Experian and they're showing a balance of $500, and that same credit card number 1 is on Equifax, but they're showing a different balance, that means you have to dispute it. Whatever your actual balance is, you will have to send individual letters to each one of those credit bureaus disputing that incorrect item, so that way they can correct the inaccuracy. Because a lot of times you don't have to get things removed, you just have to get things corrected. That could also help your credit score. So how do you assess your credit health? You first have to understand how you get your credit score. Your credit score ranges from 300 to 850. So if you understand where your score falls within that range, you can help gauge your credit health and your borrowing potential. Each category has a percentage amount, how many points you can get per category. So for instance, if payment history calculates at 30% of the amount of points you could get for this particular category. Like I said, credit score ranges from 300 to 850. So you start at 300. So that means there's 550 points for you to get to 850. So let's go to the screen. You start at 300 on your credit score. You have 550 points to get to 850. So let's say you make a late payment, and that's 30% of your calculations. Now, let's see how much 30% is by 550. So if you have 550 plus 30%, potential 165 points that you can be getting hit with if you have one late payment. So imagine a late payment and over 30% utilization. That's over 370 points that you're losing if you're not maintaining within those 2 categories. So it's very, very important to pay it on time and have a minimum of 30% utilization on your credit cards. So what are some factors that affect your credit score? Some of the key factors that influence your credit score include payment history, credit utilization, your length of credit history, the types of credit, and your recent credit inquiries. It's important not to keep applying for credit cards when you keep getting denied. This is a negative impact on your credit history. If you do some math, that's a 10% category. So within that 10% category, that's 55 points in that particular category. So you want to be careful when you're out there applying for credit. Nobody wants to lose no type of points in no particular category. We want to gain points, not lose points. So how do you improve your credit? You first have to identify what are the items that's damaging your credit. Then you will have to send out some dispute letters in order to challenge those letters to get those items either corrected or deleted. How do you analyze your credit report? So when you're reviewing for accuracy, you want to look for things like making sure the name is correct, making sure the amount that you owe is correct, making sure the date that you opened it is correct, making sure that the lender that you actually owe is the right lender that's reporting on your credit report. In addition to that, it needs to be the same across all three of the credit bureaus: Equifax, TransUnion, and Experian. So how do you identify red flags such as late payments, high balances, or accounts you don't recognize which negatively impact your credit score? With our IDIQ monitoring or our MyScore IQ monitoring, you will be able to monitor your credit to know if someone is actually using your name or social security number, so that way you will stay in the know and be alerted if anyone is out there trying to get credit in your name. So it's very, very important for you to monitor, maintain, and manage your own credit profile. Understanding the report terms. Familiarize yourself with terms like charge-off, collections, and inquiry to better understand your credit report so you can take the appropriate action needed. You can't use the same wording in the letter when you're disputing against inquiries, charge-offs, or even late payments. You have to attack each one individually, and each one has a specific way you speak to it for each negative item that's on your credit report. So it's very important for you to understand how to analyze your credit report and also how to attack those negative items that's potentially hurting your credit profile. So some of the common credit report errors: we have error types like your personal information can be correct, you have outdated account statuses, and some of the accounts that even don't belong to you. So a lot of times you move around, maybe every 2 years, 5 years, whatever it is, you may have some old addresses on your credit profile. Those old addresses could be tied to some old credit cards. It's wise to update your credit profile and make sure that you have your current address. You can have your current address, and if it's less than 2 years, you can have your previous address on there as well. But just have your current address on your credit profile, so that way when you do go disputing those credit cards that's tied to those different addresses, it'll make the dispute process just a little bit easier. You also want to know how to familiarize yourself with these credit reports so that way you can dispute these items correctly. Like I mentioned before, you can't dispute an inquiry with a late payment letter. You have to send the right information for the right type of item you're trying to attack. So how do you prevent some errors? You have to have regular monitoring of your credit report and help prevent errors from lingering and potentially harming your credit score. I can't mention this enough. Our My IQ score, $27.99 per month, will help you monitor your credit. I use it all the time. I get credit alerts. Anytime I have some type of alert on my credit report, I get a text message straight to my phone, so that way I could check it out, make sure it's something that's valid, or see if there's something I need to be disputing. So what are some of the credit score influences? Definitely your payment history. On-time payments positively influence your credit score. One late payment can reduce your score up to 165 points. So it's very important to strategize how you make your payments on time. If you're using your credit card excessively, then set up an auto pay for just the minimum amount. And then by the time the statement day comes, try to pay a little bit more if you can, so that way you can bring your balances down as low as possible. But if you cannot do that, at least make your payments on time, then try to figure out a plan how to bring your balances down. So your credit utilization, this is also a very important factor. If you are above 30% utilization, that's also another 165 points that you could be losing on that off your credit score. So you don't want to be losing not 1 point. So it's very important for you to maintain a 30% utilization. And that's not just on one credit card, that's all of your credit cards across the board. And that just goes with your credit cards. It doesn't go with your auto loans or your mortgage. Those are installment loans. Those are categorized differently. You just have to make sure you pay those on time. That's all you have to do with those. But when your credit cards, you have two things to worry about. You have to pay it on time, and you have to maintain less than 30%. So it's very important for you to maintain a budget and just try to stick to it. A little bit of discipline. It takes some work. It can be challenging and tough, but you'll get to it if you stick to it. It's like working out. And also, another thing that can help you is the length of your credit. So if you have a credit profile that's 2 years or more, it definitely helps when it comes to boosting your credit. It puts you in a different credit bucket, because consumer reporting agencies put us in particular buckets. So there could be buckets of people that have 600 credit score and maybe one late payment. This is how they advertise, and you sort of get these information or these free offers or these free approvals. This is how data furnishing companies send out information around to try to send promotions, so that way we could apply for credit for these particular different credit lending agencies out there. So some strategy to repair your credit. First, have to identify what the issues are. You have to recognize what the problems are. So if you understand the signs of credit issues such as declined credit applications or high interest rate or unexpected drops in your credit score, you need to familiarize yourself with this. So if you're applying for credit and you keep getting denied, then you need to take a look and see why you're getting denied. Take a look at your credit report, check your credit score and see what are the items that's damaging your credit report, and then dispute those items so that way you can get them overturned, corrected, or deleted if they need to be. You have to prioritize your issues, determine which issues are more important or detrimental to your credit, and you have to prioritize addressing them. So you have to find out what is the most detrimental item that's hurting my credit score the most. What is the item that's most damaging my credit? Those are the ones you attack first. Is it the high interest credit cards? Is it the late payments? Is it the charge-offs? Whatever it is that's really, really damaging your credit report, that one, you attack that first, and then you just snowball down to the next from there. Or the other step is you could also seek professional help. You could contact a lawyer or you can contact a credit repair company. We also will help you. We have courses to help you. We have a credit repair course that could actually help you do it yourself. We have credit letter software. You can send your disputes online directly to the credit bureaus by clicking out the information and then sending it straight to the credit bureaus. It's all legit, and everything would be tracked and managed and updated in real time. So if you're interested in getting help with rebuilding your credit, because I understand how tough it could be with challenging these collection agencies or either disputing items with the credit bureau. So if you need help, click the link below. We could give you a free credit assessment. Then we can discuss what are the items that's damaging your credit. We can move to the next step and develop an action plan so how we can dispute those items. How do you dispute credit reporting errors? You first have to gather all your documentation, collect any relevant documentation that supports your disputes, such as account statements or correspondence with creditors. So if you're speaking with collection agencies and they send you a letter and you want to make sure you keep that letter, or if you're sending any letters back and forth, you want to make sure you keep all those correspondences before you send out your dispute to the credit reporting agencies. You want to put your dispute letters in writing. You also want to go to the post office and mail them off certified. This will ensure they can say they never received your letters, because you have to sign for these letters in order for it to be received. Or you can use our credit letter software where you could do your disputes online. One click send to Equifax, TransUnion, and Experian. And you also have to follow up. So once you send out your dispute letter, usually after 3 or 4 weeks, they will send you back a response. Depending on that response will either enable you to follow up or not follow up. They will either delete the item or mark the item as being verified. If the item is being marked as being verified, then you have to move to step 2, get a little bit more aggressive and find out how did they verify that particular item if you're actually challenging that item to get it corrected or deleted. So some debt management plans. One of the things that was hardest for me to do was create a budget. It was very hard for me, even though I had high paying jobs with being a fire alarm technician, I really didn't create a budget till 3 years ago. So after I've been in my business almost 8 years. After the first 5 years of me just messing up all the money that I made, I had to figure out how I could hone in and create a real budget so that way I could stick to it and actually have some money for myself, because it was just depressing to me how I was making so much money and I just never had no money to pay my bills, or looking at my family's faces like I just can't get it right now. So creating a budget is very important, and doing it is actually easy. Once you start doing it, you'll start seeing it grow, and you'll actually start wanting to go harder at creating a better budget for yourselves, because you start to see like, wow, I could actually do this. So just start out as small as you can, $10, $15, $20 or something like that, so that way you can start building a discipline to actually putting away money, and then you got to learn what to do with the money after that. But for now, we just want to figure out how we could manage and maintain our credit, build our credit, and then move on to the next step, one thing at a time. You also have to learn how to negotiate with creditors. You contact them, you negotiate your payment plans, your settlements, and things like that. Don't be afraid to talk to them, and also don't be afraid to give them any information. You can verify what your name is, you can verify your address, but when they start talking about money, all you have to do is say, listen, I don't discuss my finances over the phone. If you have any information about this alleged debt that you claim that I owe, send it in writing. And please, you don't have to call me anymore. Just put all your correspondences in writing. So now, yeah, you verified your name, you verified your address, but you didn't verify you owed the debt. You told them that we don't talk about that, and you send that by mail. So when they send that letter in mail, then you send them a debt validation letter from that. Then you start disputing directly with the collection agency. You can't consolidate your bills. What I mean by that is try to figure out a way you can snowball affect your payments, right? So if you're paying your minimum payments across the board on your credit card, car, your rent, and all these particular things, find a way to get a little bit more money, 25 or 50 more dollars, and apply it to one of the credit cards until that credit card is paid off. So if you're making a minimum payment of $25 and you find an extra $50, now that's $75 that's going to that card. Once that card is paid, you move that $75 over to the next one. So if you're making a minimum payment of $25 on card number 2, that $25 now becomes $100. You get me? So keep the snowball effect. I know everything takes time, and you just have to build out a plan. If it takes 2 years, 3 years, 5 years, once you build out a plan and actually finance it into your budget, you'll figure out how to go harder later. You gotta just start with something in the beginning. So some credit repair services, you have to understand these credit repair companies. You have to learn about the services they offer. You have to see if they legit, and you have to see what the costs that are involved. We don't charge to fix your credit. The only thing we charge for is a credit assessment, and we do a pay to delete. What that is we import your credit report into our system, and our system will calculate how many inquiries you have, how many charge-offs you have, how many negative items that you have, and each one has a price associated with it. So for inquiries, each inquiry is $3. So if you have 10 inquiries and that's the only thing you have, for us to remove those inquiries will cost you only $30. That's how we charge to help you repair your credit. The only other thing we charge for, like I said, is to do a credit analysis or a credit assessment to help you understand where your credit is at, what you need to do to fix it, and we'll give you the first 15 letters to help you fix your credit by yourself. We'll even give you 30 days free for you to use our credit letter software to help you repair your credit. You want to also avoid scams. There's a lot of scammers out there sending through phishing emails. They're hitting websites. They're sending you text messages. They're catching you on Instagram, Facebook, coming in as your family members or friend with no picture. So be aware, understand who the scammers are, and understand how to protect yourself from scammers. And with our credit letter software, you can repair your credit all by yourself. You can learn how to repair your credit and send out these dispute letters all by yourself. You don't really have to pay nobody, but I know most people don't have the time to do certain things, and they just need to have someone else do it for them. So if you're that type of person who have that time, then we are here to help you. So building and maintaining a good credit, you have to learn how to smartly borrow your money from lenders, whether it be from banks, whether it be from credit card companies, whether it be from other lenders. You have to learn who's giving you the best possible option when they actually lending you their money. You want to make sure that you always have on-time payments, set up reminders, automatic payments for the minimum or even more, whatever you could afford. But at least I hope you could afford at least just a minimum if you're being extended credit, so that way you can always make sure you pay that on time. And you want to have a credit mix, couple credit cards, 3 to 5 credit cards, 5 to 15, $20,000 limits. If you don't have that, anywhere from $500 to $5,000 limits, that'll help you when it comes to probably establishing getting a mortgage. You want to possibly have an auto loan. You want to have an installment loan if you can. There's also starter installment loans where it's like a secured loan. You get something like $1,500 and all you got to do is pay into it. And once you pay up $1,500, you'll get the $1,500. That's like another way you could put an installment loan on your credit profile to help you build and boost credit. So some of the credit building tools could be secure credit cards, where you will have to put money on a credit card for you to actually use the credit. Places like Capital One, Open Sky, Merrick Bank, these are places where you could get a secure credit card. I started out with a Capital One card to help me with the business and also the personal, and also an Open Sky card where I had to put $300 on and got that actual credit card up to $3,000 by just putting money on it. So even though you put the money on the credit card, it still reports to your credit bureau if you use it responsibly. So it's a good way to help you boost your credit. You also have credit builder loans, like something like they'll give you a $1,500 balance, and all you have to do is pay back that $1,500, and now that $1,500 become yours over a period of time. You also have authorized user status. If you know someone, a family member, an uncle, an auntie, your mom's, a pops, a cousin, or something like that, even a friend, they have very good credit, they could put you on as an authorized user. But I would suggest if they add you as an authorized user to a credit card, that they don't give you the credit card. You just want the profile. You don't want the credit card, so that way you could live irresponsibly or either be responsible. I'm not judging or anything like that, but I just think the best strategy is, if you're going to make somebody authorized user, don't give them the credit card. Just give them the profile. And don't sleep on department store cards. Don't sleep on Finger Hut. Don't sleep on things like that. Those credit lenders can also help you boost your credit score. You also want to monitor your credit regularly. I can't stress this enough. With our identity theft monitoring and our credit monitoring services, I can't stress enough how this can actually help you if someone is trying to use your credit, or if you get a late payment and you know you paid it on time and they're reporting it late, you get those alerts ASAP. So it's a good way to help you manage and maintain your credit. You want to schedule regular checkups of your credit report to catch any potential issues early and maintain your credit health. Our credit monitoring services, it would be wise to consider using these services to stay ahead of the curve. You don't want nobody out there using your identity, especially identity theft protection, because if someone steals your identity and then start racking up a whole bunch of credit and money in your name, it is so difficult to undo that. And don't do no clean sweep if you don't need to actually do a clean sweep. If no one has never used your information, I suggest you never do a clean sweep or anything like that. That right there is fraud. You should not be doing anything like that. Learn how to dispute and get the items corrected or deleted from your credit report. It's easier doing things the right way. So long-term credit health, you have to have some type of financial planning, create a budget, stick to the budget, just figure out a way you could put some money to a side, get yourself a savings plan, get yourself an emergency fund, get yourself a tricking fund, whatever it is you need to do, set up certain bank accounts for the money that you need or want to save for. And you have to never stop learning. Continuing education is the best thing to do. You need to stay informed, stay up to date. There's many people on YouTube that could actually help you create a budget or help you understand credit or help you understand how to build your wealth or help you to understand any and everything you need to learn. So the only person that's stopping you is you. You have to be able to adapt to life changes and be prepared to adapt to your credit management strategy. You have to be prepared for changes such as marriage or even divorce. So it's always good to plan ahead. A car always breaks down when you save your first $1,000. I don't understand why it happens that way, but you have to get past that. Once you get past that, then you will be able to have a more fruitful life. So that is the end of this presentation. I really appreciate you for watching. If you stayed to the end of this video, you could click the link in the description. I have a free PDF for you. This is a free credit repair ebook that will help you understand how to build your credit and also give you some action steps to actually dispute your credit. My name is Taurus the General. This has been a Finance Finesse Academy. You can follow me on all my social medias at Taurus the General. And this has been Understanding Your Credit and How to Manage and Maintain It. Peace.